and we want to welcome you to today's very special training. Today, we're going to be discussing how to use our long-term confidence strategy to help clients prepare with clarity and confidence for their financial future. Today, I'm going to be sharing insights into the opportunity that exists based on the current life insurance coverage gap. We'll talk about the scope of the funding options available in the long-term care market. We'll also get into what the advantages of a hybrid life insurance solution is and how it stands out to your clients and your communities. We'll also talk about client considerations when identifying opportunities, what makes hybrid life insurance a unique solution, and we'll also talk about best practices for presenting a benefit-based solution. Finally, we will wrap up and we will introduce our long-term confidence marketing toolkit to help you make a meaningful impact to your clients with the TransAmerica FFIUL and long-term care rider. But before we do that, again, we want to welcome you to today's training. Again, my name is Eric Hahn with TransAmerica. Super excited to be here with you today. Some quick housekeeping. We do have some downloadable material for each and every one of you to take advantage of. You can locate the downloadable material in the bottom left-hand corner of your screen. When you get to that section, you'll be able to find our long-term care agent checklist. You'll also find the long-term care pre-built social campaign. And then last but not least, you'll find our long-term care brochure there. Feel free to leverage those. Let us know what you think. Your feedback is a gift, and we truly appreciate your partnership. So now that I've given you an introduction of what we're going to cover, again, my name is Eric with TransAmerica. I want to say thank you. Thank you for choosing TransAmerica. Thank you for choosing World Financial Group. And more importantly, thank you for doing what you do day in and day out. I wouldn't be here. The team wouldn't be here. So again, we truly appreciate you. But what you registered for here today is our long-term confidence PowerPoint or presentation. Again, I hope you have your TransAmerica pens and notepads available. Make sure you're jotting those notes down. If you have questions, there's also, again, a Q&A box, so feel free to take advantage of that. We're here to help you. And any questions that we don't answer today, we will certainly follow up with afterwards. So let's go ahead and dig in. The first thing that I want to get you thinking of in today's training is really 4 different main concerns that a lot of clients have. Number 1, who do you know that is concerned with rising tax rates? Do you think taxes are going to stay the same? Do you think taxes are going to go down? Or do you think taxes are going to go up? Number 2, who do you know that is concerned with rising healthcare costs? Remember, the number 1 cause for bankruptcy and hardship withdrawals is medical expenses. Number 3, who do you know that is concerned with rising inflation? We're getting less for our dollar nowadays than we did several years back. And number 4, who do you know that is concerned with market volatility? So again, just to recap, who do you know that's concerned with rising taxes? Who do you know concerned with healthcare costs? Who do you know concerned with inflation? And who do you know concerned with market volatility? If you said yes to any of those 4 concerns, you may be interested to hear how we position our Index Universal Life solution as a hybrid vehicle, especially when offering long-term care. So stay tuned. You're not going to want to miss out. But again, now that we've addressed some of those 4 concerns, what is long-term care? Well, long-term care is really the ongoing need for help with certain daily living activities such as bathing, continence, dressing, toileting, eating, and transferring. If your client loses the ability to independently perform at least 2 of those 6 daily living activities, or they suffer from a severe cognitive impairment that requires substantial supervision to protect themselves from threat or harm, the long-term care rider may be something that you want to look into for that client, not only so you're doing your fiduciary responsibility, but so that the client has better protection. Also keep in mind that the long-term care rider is actually going to transfer the risk from the insured to the insurance carrier. Remember, the long-term care rider is simply going to allow the policy owner the ability to accelerate a portion of that death benefit early to give them a shot and pay for some of those qualified services. So that's, again, really what long-term care is. It's a rider that gives them the option to accelerate early when receiving specific qualifying services. We've talked about what long-term care is, but now let's talk about the why. What is the coverage gap? You'll see that we're living longer. We're experiencing more illnesses nowadays than we have in the past. In fact, 70% of us turning the age of 65 will need to use some type of long-term care service to support our remaining years. And while 70% of us are going to need it, very little of us actually have a plan in place. You'll see the amount of long-term care policies sold in 2021 was limited to just 75,162 policies. That's not going to cut it, right? Again, we're living longer. We're experiencing more illnesses. 70% of us are going to need it, but only, again, about 11% of us have a plan in place. So there's a massive opportunity for you as a life insurance agent to go out there and educate the client and grow your business as an insurance agent. Up next is the reality, right? So we know the cost of care can be pretty substantial. In fact, when you look at the national averages over here on the left in blue, the national average for a nursing home care is $9,700. When you look at a home health aide, it's $5,000. And when you look at other parts of the country, you're going to see that some of them are going to be even greater. Look at Los Angeles and Orange County. The cost for nursing home is $15,573 a month. When you look at home health aid, $5,500. When you look at New York, it's even greater at $16,272. And folks, assuming a 3% interest rate, these costs that you see here on the screen are going to double in just 24 years. So again, it's better to have a plan in place and not need it versus not have it and need it. So here's where our long-term care rider or long-term care options come into play. Typically, there's 5 different options that the client has. Again, one may fit that client situation better than others. So it's important to make sure that you're doing your financial needs analysis as an agent. The first option when it comes to long-term care expenses or services is using a self-funded option. A self-funding option requires the client to have a significant amount of personal savings to fund long-term care needs. That's probably not going to be the common option for most, right? Second option is going to be governmental programs. So think about Medicare or Veterans Health Administration benefits. The problem with these benefits or options is that you may not know what you'll qualify for, right? There could be some gaps in your insurance or in your plan. Next up is your hybrid life insurance solution. We're going to dig into this here in just a couple minutes. It's something that your clients want to know about. And when you look at hybrid life insurance, it combines the core benefits of an IUL with the extra layer of protection like a long-term care rider or living benefits. Don't worry, again, we'll dive into that hybrid life insurance vehicle in more detail in just a couple minutes. Up next is your long-term care annuity. An annuity with an enhanced withdrawal for qualified long-term care expenses. And then your last option for long-term care is going to be your traditional standalone life insurance contracts. But remember, with standalone long-term care, you're really kind of betting on yourself becoming sick. If you don't get sick, most of them are a use it or lose it type of deal. So again, may not be the best option for most clients. So remember, you have 5 options. Today, we're really going to dive into one of these options, and I'd like to introduce to you the hybrid life insurance vehicle. You already are well accustomed to it. You know about it. You're selling it and offering it to your clients already and have been for years. It's called the FFIUL. If you didn't hear about the FFIUL is the #1 selling index universal life solution in the industry for the last 9 consecutive quarters. Why is it so popular? Well, when you look at this Swiss Army knife of the financial industry being the FFIUL, it's really a quadruple tax advantage vehicle. You have a tax-free death benefit if we pass away too soon. You have tax-deferred accumulation linked to index accounts, which can help to outpace inflation. You have the ability to access that cash value through tax advantage loans and withdrawals when managed and sufficiently funded appropriately. And then last but not least, again, you have the ability to make tax-free transfers from one index account to another, leveraging dollar cost averaging or automatic transfer rule. But on top of those four core benefits, nowadays we also have the extra layer of protection with long-term care, living benefits, and the concierge planning rider. Specific to today's presentation, though, when you look at long-term care, again, as I mentioned, we're living longer, we're experiencing more illnesses. When you elect the long-term care rider, which, by the way, is optional, it doesn't come with all of your FFIULs, you do need to apply for it. But when you elect long-term care, our LTC rider is considered to be a modified indemnity model. What that means is that we allow the policy owner the option to accelerate the minimum, which is $500 a month, all the way up to the maximum, which is 2% of the face amount, or the HIPAA per diem times the number of days in a month, whichever is less. And just so everybody knows, the HIPAA per diem daily average for 2023 is $420 per day. But again, that is an annual number. It does fluctuate. So do a Google search January 1st of 2024. You may see that either go up or you may see that go down. But again, our rider is a modified indemnity model. We allow you to accelerate up to the maximum regardless of the cost of expenses incurred. And you do need to submit receipts or timesheets to us showing those qualified services. Not only is our rider considered a modified indemnity model, but we are one of very few insurance carriers that also give you the option for an increasing long-term care. Let me repeat that. Again, we are one of very few insurance carriers that also give you an option to offer an increasing long-term care rider. Why is this a big deal? Well, again, cost of care is going up. Taxes are going up. Inflation going up. Market volatility, right? We can't predict. So when you look at, again, increasing for long-term care, think of that any cash value that you build will bump up your death benefit and your long-term care protection. Again, we're one of very few insurance carriers that have an increasing option available for long-term care. Not only that, but we also have in majority of states informal care and international coverage options for long-term care. What do I mean by informal care? Well, if you're here in the United States and the insured is receiving personal care from family and friends, the client can still potentially accelerate under their long-term care rider, assuming they have already the plan of care in place, they already have the diagnosis, and they're receiving qualified care. In addition to that, if the client travels abroad, depending on the international facility that they're receiving care in, the client could also be eligible for international long-term care accelerations. And again, this can help to cover the cost of care and provide a better tomorrow. Last but not least, our long-term care rider also has a potential residual death benefit available. The residual death benefit is only available if the policy owner exhausts all of their long-term care benefits, they do not recover, and they pass away with no outstanding loans. If that occurs, we have a residual death benefit of $10,000, which is, think of it as an intrinsic value. It helps to pay for some of the burial cost upon death. So again, you can see, folks, the hybrid life insurance solution like an IUL with long-term care could be a very, very powerful option to offer your clients. And, if you don't get sick and you don't need the long-term care rider, the power of the hybrid option is that you have all of the additional core benefits and features under the IUL. So we hope that you can see the power and the benefit of a hybrid option, but just to really hone in on our target market for long-term care, remember, as I mentioned earlier, you're not going to be able to offer long-term care to everybody. There is a specific target market. The issue ages for the client need to be between 18 to 75 years old when you're going through the underwriting and application process. The long-term care rider is underwritten, so it's not a guaranteed issue type of rider. We do underwrite our long-term care rider based on morbidity, and you may see a different risk class for your long-term care compared to your base life insurance contract. The best risk class for long-term care is preferred, and your worst risk class is going to be a table D. Anything lower than table D is going to be an automatic decline. From a face amount perspective, the minimum face amount on FFIUL to be able to offer the long-term care rider is $100,000. Your maximum upfront face amount for FFIUL to be able to offer long-term care is $2 million. And again, that long-term care protection may go up if you have the increasing option. From a acceleration perspective, long-term care is a monthly acceleration or a monthly benefit. Remember, you can accelerate anywhere from the minimum, which is $500 a month, up to a maximum, which is 2% of the face amount, or the HIPAA per diem times the number of days in a month, whichever is less. The benefit trigger, as I mentioned earlier, is specific to being unable to perform 2 out of the 6 daily living activities, or they suffer from a severe cognitive impairment that requires substantial supervision to protect themselves from threat or harm. Last but not least, before any benefits are payable, there is a 90-day elimination period that would need to be satisfied. And by the way, folks, this 90-day elimination period does not need to be met within a certain time frame. The days of service do not need to be consecutive days, and you only need to meet that elimination period once. So again, very important. Let me repeat those 3 things. The elimination period does not need to be met within a certain time frame. You do not need to receive that care on consecutive days, and you only need to meet the elimination period once. Last but not least, when it comes to charges for the long-term care rider, this is, again, a rider that incurs a charge. So you will have a monthly charge for long-term care through the insured's age of 121. And it's, honestly, partly based on your net amount at risk to the company. So lots of information. Again, we're living longer. We're experiencing more illnesses. The number one cause of bankruptcy and hardship withdrawals in the U.S. is medical expenses. And as I mentioned, it's better to have a plan in place and not need it versus not have it and need it. So we touched upon a lot already, but again, I know we have a mixed audience. We have new agents, we have veteran agents with us here today. So again, I want to take a couple minutes and I want to reiterate how the long-term care rider actually works. So remember, again, it's an optional rider you have to apply for at the time you're going through the application. It does have additional underwriting to qualify, and there is a cost. Now, once the contract is in force, assuming there's a long-term care rider on the contract, in order for the client to be able to use the long-term care benefits, certain conditions have to be met. Number 1, the insured would need to be certified as a chronically ill individual by a licensed healthcare practitioner. This means that they're unable to perform 2 out of the 6 daily living activities. So bathing, continence, dressing, toileting, eating, and transferring, or they're unable, or they suffer from a severe cognitive impairment that requires substantial supervision to protect themselves from threat or harm. Once they have that diagnosis, the practitioner, the physician, would also need to create what's called the plan of care. The plan of care is essentially a written assessment that outlines what type of qualified services would need to be performed to that client. Once they have that diagnosis and plan of care, do not wait to meet the elimination period and then submit the claim. Go ahead and submit the claim to TransAmerica immediately. As soon as you have the chronic diagnosis and as soon as you have that plan of care, submit that claim to TransAmerica, get the ball rolling. You will need to provide the plan of care, and you will need to provide receipts and timesheets showing those qualified services that are being performed. But again, do not wait to submit the claim until the elimination period is met. Submit it as soon as you get this ball rolling. Now, if the client starts that elimination period, another thing that I want to point out is any expenses that they incur during that elimination period is their cost to cover. Let me repeat that. Any cost that the insured encounters during that elimination period is their cost to cover. We're not going to reimburse them for that cost during the elimination period. But if the elimination period is met and provided the claim is approved, again, long-term care benefits will go into effect, and it will reduce your policy value and your death benefit dollar for dollar. So you will need to take that into consideration prior to going on claim. I'd like to introduce you to Jessica. This is our first case study here. Jessica was 35 years old. She's a Texas resident, and she had been currently caring for her parents' long-term care needs while raising 2 children. She is contributing towards several long-term goals, including college savings for her kids, and she's aware of the risk that long-term care expenses could have on her retirement savings. So Jessica would like to have a protection strategy or solution put into place with the option to still save and build accumulation for other types of financial goals. Some of her needs are as follows. She's looking for death benefit protection. She's looking for a solution that is manageable and allows for flexible funding and premium payments. She's looking for access to cash value for emergency situations, and she's looking for long-term care protection that can increase over time. So in this scenario, we apply at a preferred elite risk class. She elects to allocate her premium to the global index account, which of course is diversified between S&P 500, Euro Stock 50, and Hang Seng. She has an initial face amount of $500,000, and she elects to pay $500 a month to the age of 65. Her day one maximum monthly long-term care benefit based on 500K would be $10,000. And in this scenario, she did leverage the increasing death benefit. So if you missed this earlier, again, I want to call this out one more time. We are one of very few insurance carriers that give the client an option for an increasing long-term care rider. Think of this as, again, a built-in inflation fighter. Any cash value that the client builds while having increasing and long-term care is going to bump up your death benefit protection, and it's going to bump up your long-term care protection. So again, it's a great inflation fighter. Fast forwarding just a little bit here, and still talking about Jessica. Remember, Jessica opened the plan at 35. Let's fast forward 25 years to the age of 60. If she needs home health aid, it's now $9,400 versus today's cost at $4,500. If you look at age 60 nursing home care, that went up pretty substantial as well. Today's cost is $7,200, but fast forward 25 years, the nursing home care would be at $15,000. And then again, fast forward 25 years, remember she started with a $500,000 policy with an increasing option in long-term care, and she has now built $260,000 in cash accumulation and now has a death benefit of $760,000. So instead of being limited to $10,000 a month like she would have if she had a level option, she actually has $15,207 available as a monthly long-term care acceleration using a face amount of $760,000. Last but not least, if she had, stayed relatively healthy and didn't file any claims for long-term care until the age of 80, you can see that cost of care goes up even more. And the long-term care benefit also went up pretty substantial because, she was continuing to build cash value in the contract, which also continued to bump up the death benefit and long-term care benefit available. So you can see, again, if she had filed a claim at age 80, her monthly long-term care benefit would be $26,257. So while it's important to understand that, the cost of care is going to go up, it's also important to understand that how you structure your contract is also going to be a very big impact on the performance and success of the solution. Now, still talking about Jessica, but again, reiterating the cost of waiting. Remember, in the scenario we just went over, Jessica was 35 years old. She was paying $500 a month. She was planning to pay to the age of 65. So she would have put in about $6,000 every single year, right? Now, her accumulation, looked pretty good, right? And, her long-term care benefit at the age of 80 also looked pretty good, about $26,000. But what if Jessica would have waited 5, 10, 15 years? How expensive would it be for that client? Well, this again example illustrates that. So if Jessica waited an extra 5 years and opened the FFIUL at age 40 instead of 35, you can see a substantial increase in her premium payment. She went from $6,000 to now $8,200, right? If she had waited another 5 years, if she waited 10 years from 35 to open it up, she opened her policy at 45. You can see again, it goes up again. Now she's required to pay $12,000 a month to get to a $26,000 monthly long-term care benefit at age 80. And then last but not least, if Jessica would have waited until the age of 50 to open this solution, if again she was wanting to have 26,000 in monthly long-term care benefits available at age 80, she would have had to put in $18,789 a year to age 65 to catch up. So again, the cost of waiting is real. Don't wait. Try to get these solutions locked in as soon as you can and while the client is still young. Remember, age has a significant impact on the cost and premium of the policy. So we've looked at Jessica. Now I'd like to introduce you to Fernando. Fernando was 45 years old when he was considering opening a hybrid life insurance solution with long-term care. He's a California resident. And Fernando is currently caring for his parents' long-term care needs while raising 2 children. He's contributing towards several long-term goals, including college savings for his kids, and he's aware of the risk that long-term care expenses have on his retirement portfolio. So Fernando, again, is interested in finding a solution and a strategy that gives him the means to still save for those other financial goals, but gives him, protection and peace of mind. Just to reiterate his needs, again, he's looking for long-term care. He has a need to cover long-term care expenses and legacy protection. He's looking for flexible premium funding options with a manageable cost, and he's looking to pay premiums long-term as a commitment. So again, in this scenario, we structure the contract as Preferred Plus. We have a global index account option, and he's paying about $600 a month to the age of 65. The initial face amount in this, folks, is $250,000, and he's now elected the level death benefit, not the increasing option. So because he elected level, remember the cash will not bump up his long-term care benefit or face amount, and his maximum monthly long-term care is going to be based on $5,000. But again, let's fast forward just a tad here. In this example for Fernando, again, he was paying $600 a month, $7,200 a year to the age of 65. His projected cash value at that point is $218,000, assuming nothing changed, with the benefit of $250,000. Unfortunately, later in life, at the age of 68, he has a diagnosis that leaves him unable to perform 2 out of the 6 daily living activities, or requires substantial supervision to protect himself from threat or harm due to a cognitive illness. So he files a claim. He files a maximum monthly acceleration of 2% of the $250,000 death benefit for long-term care. 2% of the face amount comes out to be just under $5,000 a month, and he's going to receive, in the first year of long-term care payouts, $59,860. Remember, as Fernando is receiving these long-term care benefits, it will reduce your policy value and your death benefit dollar for dollar, so you will need to take that into consideration prior to going on claim. Also, you'll see at the age of 73 in this example, when he has depleted his total long-term care benefit, we would also potentially have a residual benefit of $10,000 minus any outstanding loans. We'll talk more about that residual benefit in just a couple minutes. But again, he had paid in $144,000. He had a level option with $250,000 in coverage. And in this situation, the death benefit did go up at the age of 38 to $364,000 because of corridor. So he actually still has a remaining death benefit at the age of 80 of $192,000. And the total policy benefits paid out in this scenario would have been $442,412. That's approximately 3 times what he paid in when it comes to premium payments. So again, this is giving him great protection early and great protection in his later years. So we've gone through what long-term care is. We've talked about a couple different ways to position IUL and long-term care. We've talked about the core benefits. We've given you 2 different case studies for Jessica and Fernando. Now let's talk about delivering a benefits-based solution. Remember, folks, not everybody's going to be in the same situation in life, right? So it's important to do your financial needs analysis as a financial professional. Sit down with that client. Do the personal financial strategy or statement, determine what they have, determine what they don't have, what are they interested in, what do they lack, right? And not only do your financial needs analysis, but make it personal, right? If you have a personal story that you've encountered, or if you know of a client that has a pretty significant experience and you're able to share that with your client, go ahead and do that, right? Stories sell. Okay, ask your current client if they've known a friend or family member who suffered a serious illness or who has needed long-term care. Find out how that individual planned for it, or if they didn't plan for it, and how they overcame it. Also, keep in mind, ladies and gentlemen, that there's going to be some key reasons why clients take action. Some of those could be as simple as the client having a choice and having control of where and when they receive that care. Other key reasons that clients could take action could be that they're looking to protect their hard-earned retirement savings. They want to leave a legacy for younger generations, and maybe they want to ensure their loved ones have the resources for care. Maybe they don't want to be a burden to their family. So again, understand that the more personal you are with the client, the more you understand what motivates them, the more successful you're going to be in the field. And at the end of the day, we're here to help support that conversation. Remember, TransAmerica is making a significant investment in not only your dedicated sales team with our new hybrid wholesalers, but with some new upgraded graphics in our TransAmerica Life Illustrator. You're going to see in the very near future that our long-term care supplemental illustration will be improved with improved descriptions of rider benefits. You'll see a breakdown, or a page that will break down the new cost of care data to show need for long-term care protection. You'll find a page that breaks down current cost of home health aid and nursing home care specific to the insured's issue date. You'll even find a link in the illustration that will take you to www.whatcarecosts.com. If you're not fired up by that, well, here's where it gets even better. We're now going to have a greater ability to show potential growth of rider benefits with the increasing death benefit. And I've mentioned it again, probably 2 or 3 times at this point, but this is again an area where TransAmerica's FFIUL is extremely competitive. We are one of very few insurance carriers that give you an increasing option on the long-term care rider if you elect the increasing option. Not only that, but you'll also have a breakdown which will help you to relate long-term care benefits to cost of care. And remember, folks, we're just getting started. You'll also find a new streamlined claim scenario on a single page. It'll give you a breakdown of the annualized long-term care benefit. It'll break down, what's your outstanding loan, what's your cash value, what's your surrender value, what's your available death benefit, and what's your remaining long-term care benefit. This will help you to better serve your client and better, break down how long-term care is so critical in an overarching plan. And remember that TransAmerica wants to be a part of this conversation. Don't touch the dial just yet. Things are changing constantly, right? And we want to let you know that we have a dedicated website that houses all of the critical information that you need, whether it's an agent guide, whether it's a consumer guide, translated documents. Again, I encourage you to make this next website one of your favorites. If you haven't already done so, www.transamerica.com/agent-central is going to be really the central hub for your TransAmerica business. Again, www.transamerica.com/agent-central. If you haven't saved it, make sure you do. There's agent guides, consumer guides, underwriting guides, pre-recorded webinars. You'll find an onboarding platform. Make sure you check it out. Before I wrap up, I do see some questions here. So let's see here. Is this being recorded? Will it be shared? Yes. So it is being recorded. Ladies and gentlemen, we will be sending a recording out to you guys via email. We're also looking at exploring the Agent Central website. Maybe we can put a link of the recording out there. So yes, we will be sending this out. Second question, would someone diagnosed with brain tumor still qualify for IUL long-term care 1035 exchange? They currently have New York Life. So that's a great question. I would say it's specific to that individual case. I would highly recommend you get a risk assessment. So what I mean by a risk assessment is, get the details, the medical details of that client, give us a call at the National Sales Desk. We're available Monday through Friday, 9 a.m. to 7 p.m. Eastern, and we can get an underwriter on the line. We have quiet days for underwriting Tuesday and Thursday, so I wouldn't call Tuesday or Thursday. Monday, Wednesday, or Friday. Give us a call at the sales desk. Again, request a risk assessment. We'll give you a better idea, a verbal quote. That number again is 1-800-322-3796. Trying to plug it into the chat box for you guys here. Let's see, save to inbox. All right. So let's see here. Looks like I lost my Q&A. Sorry, folks. Give me 1 second. Just trying to find that Q&A list again, which I am not seeing. I apologize. Don't worry, folks. If you have unanswered questions, I will get back to you. We're going to get a list of these questions in the chat box, which magically went away. We will get back to you. Remember, whether you're a new agent or a veteran agent in the industry, you could literally be one sell away or one recruit away from blowing the top off this thing.